Getting all the problems today.
I'm not, dude. Come on, Zoom.
Maybe it's restream today.
All right, here we go. We good. Okay. I just need to get the screen where it would let me change the stream key.
Hmm.
It looks like we're preparing to go live.
You're on that window where it's loading on that loading bar.
Mm-hmm. Wow. Maybe you're right. Maybe it is restream.
Maybe it's restream. You have the RMTP URL correct? Not that it could be wrong, really.
Yep.
Maybe it's restream.
Okay. Fuck it. I guess we're just going to record. We're already recording, so whatever.
Okay.
All right. This is just going to be a private conversation.
So then in that case, let's do our intro later, and then we'll and then you can introduce Robert after we cut that in.
Yep. Sounds good.
Like old
All
times.
Right. Robert, you ready to go?
I'm ready.
Okay.
Thank you for your patience, sir.
All
right. So we're just going to start on 3. 3, 2, 1. You guys, I'm super excited to have Robert Breedlove on the show. Robert, it's been way too long. I know we've been trying to organize this for a few months. You've been very busy, especially since you dropped your piece about Bitcoin and Zero. How's it going? Welcome to POV Crypto.
Thanks for having me, CK. Glad to be here.
Awesome. Well, Robert, I guess why don't you help our audience understand a little bit about yourself? I know you've been on a lot of shows, so you don't have to get too deep, but why don't you give like the 5-minute introduction?
Sure. I'll give you even shorter than that. My name is Robert Breedlove, CEO of Parallax Digital. We run a crypto asset hedge fund and consulting practice. My background is in accounting and finance. Got a master's in undergraduate in finance and accounting. I was a CPA for a number of years, fell down the rabbit hole really and discovered Bitcoin in 14, fell down the rabbit hole 16, 17. And yeah, just been writing about it a lot and trying to spread the good word that honest money is back on the scene.
Robert, you've been making the rounds talking about your connecting Bitcoin to the concept of zero and how revolutionary that was. And there's a couple of tidbits that you frequently talk about, and that relates kind of the setting that we are in today to previous settings that humans have been throughout history, which I always find comparisons like that to be super fascinating. However, I think a decent amount of this podcast, at least the Ethereum side of things, will not have been as familiar as the Bitcoin listeners. So for those that haven't heard or gotten their initial toes in the water with regards to the concept of comparing Bitcoin to the number zero, can you kind of give us just the high level overview of that comparison and that thesis?
Yeah, so the impetus for me to write this originally was my attempt to answer the question, what makes Bitcoin different than all of the thousands of other crypto assets out there? And it's not a very easy answer necessarily, and it has a lot to do with the fact that Bitcoin was released first, kind of has this path-dependent emergence, which I go into in the paper.
Mhm.
And it also has to do with just the nature of money and how it's valued based on its liquidity and network effects. How it serves as how the scarcity of money historically has served as this Schelling point, which is just like all else being equal, people default to holding the scarcest money. It's the most energy efficient strategy you can employ. And in that sense, Bitcoin is Bitcoin represents the discovery of the idea of absolute scarce money that I argue. Because again, nothing physical, we've always used physical monies historically, and nothing physical can guarantee a permanently fixed supply because everything physical is just a function of our time necessary to produce it. So Bitcoin really is a monumental breakthrough in the sense that we can have something with a guaranteed fixed supply. In trying to communicate how profound of a discovery that is, I was digging into history and was trying to find something relatable. It was kind of like an unstoppable idea, which the quote I reference in the piece is, and a lot of people say this, there's nothing more powerful than an idea whose time has come. And the number 0 is what I landed on. And just at a really high level, like we haven't always had a concept for nothingness. Like like even in Roman numerals, they didn't have a number 0. They had an omicron, a symbol that represented nothing, but they didn't use it in arithmetic. And basically lacking a 0 severely inhibited a numeric system. Like you didn't get to bring in negative numbers. You weren't able to access imaginary numbers. It prevented users of the numeral system without a 0 from being able to discover calculus. And calculus is what every physical science is based on. So it's really mind-blowing. Like everything you interact with in modernity, it's a configuration of matter based on calculus. At some point, it touched or interacted with calculus to get into your hands.
Are you familiar with Eric Weinstein's podcast, The Portal?
I am. I've listened to a few episodes. Quidam recommended that one to me. And
I know Quidam really likes that one.
Yeah, I've heard some good ones, but I'm not super down the road. The one I heard recently that really blew my mind was the one with him and Thiel.
Yeah.
They kept going back to something really shifted in the early 1970s, but they couldn't put their finger on it. It's like all of science, the universities became corrupt. Science became less innovative. They were just going through this like laundry list of things, which I would say is, refer people to the website. Right. WTF happened in 1971. I mean, the lack of honest money truly does corrupt a society.
The reason why I bring that up is because he calls it the portal, because he is always discovering or finding these things that aren't really a thing, but are this new way of viewing things, or this new perspective, or maybe this new invention, but it's really an invention of an idea really than it is an actual physical invention of a gadget or something. And because something happened in the world that allowed us to take a new perspective on things, you are allowed to step through the portal and view the world from a new lens. And I think that is kind of like a concise thesis of what you're saying 0 is doing with the numerical system. Whereas like the existence of 0 actually created a significantly a whole new paradigm, a whole new dimension to operate inside of with numbers, where like numbers used to go from 1 to infinity. And then with the creation of 0, it goes from infinity to negative infinity. And then all the other imaginary numbers, calculus, and all just a much more diverse creation of new space to operate in. And I think if I gave the mic back to you, I think you would connect it to Bitcoin.
Yeah, that's everything we say, do, or make begins as an idea. Like if you want to get really nuts and bolts about it, like even we are ideas. Like the DNA that composes us, it's just an idea. It's just a string of information. It's quadratic code that configures matter to form what we are. And in the economy, like that's basically what a market is we have a collision of ideas. People are interacting, trading. When you trade someone a good or perform a service for someone, they're learning in the process, right? You give them a shovel and they start digging, they see how it works. They may have an idea how to modify it. They make a modification and trade it back. And so the whole market is this system for basically comparing your ideas, basically betting against other people in the marketplace that my idea is better than yours. And that's what entrepreneurship is. And so you really have, and that's, you know, economists would say you have to look past the seen and look to the unseen. So you have to look at these invisible principles that compose everything. And I think the big deal with zero is that it is symbolic of this philosophical concept called the void, or shunyata, which the ancient Indians that discovered it called it. And it just represents, it's basically a concept for no concept. Like it's a placeholder for nothingness. And, you know, one of the quotes I do in the piece is by Lao Tzu. He says, we shape the clay into a pot, but it is the emptiness inside that holds whatever we want. Like most utility comes in the form of emptiness. The other one he says about the wheel, right? Like it's, you make it round with spokes, but it's the energy is stored in the nothingness between it. So it's just it's a really big concept. And when you look at the history of money, all demand is subjective. So people want different things based on different situations. But historically, the 5 properties of money that people have tended to select for are divisibility, durability, portability, recognizability, and very importantly, scarcity. And so when you look at the history of money, we basically landed on monetary metals because they best satisfied those 5 properties. And of the monetary metals, gold was the most scarce. So therefore, gold became money because of people naturally buying and selecting based on their own self-interest, determined over the course of, you know, a multitude of transactions by a faceless multitude of people, determined that gold was the best medium of exchange across time, right? And it was as if the free market was trying to zero in on something that was absolutely scarce, effectively. They wanted, because again, if I can hold something that no one else can create any more of, that basically is perfected scarcity, I know that my value cannot be diluted. And so when you map that onto Bitcoin, you know, Bitcoin is just pure information. So basically it maxes out those 5 properties. And because the genius behind what Satoshi did was combining game theory, economics, and I guess thermodynamics too, in the sense you actually have to commit energy, spend energy to acquire it, to make Bitcoin absolutely scarce, which is something, it's just a totally, as I argue, a one-time discovery for money. Because you can go and make something else that's absolutely scarce, like we saw with Bitcoin Cash, the fork there. But because of Bitcoin's head start in terms of liquidity, network effects, and chain security, the mining network proliferation, that value just ends up collapsing back into it. So it's kind of like this economic singularity for money. And through that lens, I just compare that discovery, that idea of absolutely scarce money as an unstoppable idea, similar to the discovery of zero, in that zero is the capstone for mathematics. It really is. And you know, we actually didn't have infinity before zero. Zero led to the discovery of infinity. Even in Rome, the ancient Roman belief, it was based on the Pythagorean belief system, that they thought all shape and number was the same thing. So even today, when we say x squared, that's literally, you're taking a line with a length of x, converting it into a square and calculating its area. That's what it means. We got that from the Pythagoreans. But they conceived as shape and number as being identical, such that there was no such thing as nothing as a number, much less than nothing, no negative numbers. And there was no infinity. So their whole conception of the universe was finite. They thought the earth was the center of the universe. It was composed of atoms that had an impenetrable surface. You couldn't go any lower. They thought the entire universe was a macrocosmic atom. So it had this outermost sheath of stars that you couldn't go beyond. Not that there was nothing beyond it. There's like, you couldn't go beyond it. It was just finite. Yeah. So zero, interestingly enough, just by being so practical, like it basically makes a mathematical system faster, better, and less prone to error, right? It's just much more practical across the board. It outcompeted all the other numeric systems and then blew out their philosophical model as well. It said, no, infinity is real. The void is real. And it just, is such a profound thing to think that we discovered this experiential concept called the void, which, by the way, the guy that discovered it, Brahmagupta, is an ancient Indian mathematician, reportedly discovered it in meditation, which is crazy. Like, he just touched the void, right? Came back and said, hey, we need a number for this. And then it has changed the world and became the cornerstone for calculus that is the bedrock of all modernity. Everything we see or touch with that's modern is because of his discovery of zero.
So, Robert, you talk about the concept of path dependency, and I might be using this wrong, but I was recently doing some thinking, and this was along the lines of Nick Harder's article, Settlement Assurances, which talks about the difference between Bitcoin Cash and Bitcoin. And really the difference between Bitcoin Cash and Bitcoin is that one block of Bitcoin means a lot more with Bitcoin Cash. And so these two universes were going to split off, and in hindsight, we probably should have been able to see which one was going to win coming, because like Bitcoin Cash is advertising itself as a payments network and Bitcoin is advertising itself as number go up. Like, well, what do you think is going to work? The one that makes its community rich, or the one that makes its community be able to make payments better? Like, obviously it's the one that is going to make the number go up. That's where the incentives lie. And so maybe I'm not using the way that the path dependency the way you are, but like, I kind of see like, well, the fate of the Bitcoin Cash Bitcoin fork was determined from the get-go because of the path dependency of Bitcoin. Is that the right way that you're using it?
Yeah, I think Nick and I are actually saying a lot of the same thing. His is much more sophisticated technical. The settlement assurances, you can actually quantify that Bitcoin is better than all other crypto assets and clearly different. But settlement assurances are a product of the energy that is backing the network, right? Basically, because there's so much energy going into establishing that block, each block means a lot more, I think is kind of the gist of it. And again, you're back to that. To me, that's the path-dependent emergence of Bitcoin, because it was first, because it was released into the world at a time where no comparative technology existed, and that it sort of had this cover of, misunderstanding or mystique, or people just writing it off, that it was able to develop organically over time. And the idea was able to diffuse into society. People were able to set up mining rigs. It was able to mature, work out some of the early kinks. And my general argument is that idiosyncratic sequence of events is irreplicable. You can't do that again. You try to release new Bitcoin into the world today, it is inevitably attacked. Like, everyone's paying attention to this space now. We're talking about disrupting the most important technology in the world, which is gold. Like, people don't understand necessarily that gold's the most important technology in the world, but when you come to understand that central banking is built on top of gold, and that central banking controls all of the money supply and pricing decisions in the world today, and we basically have, monetary socialists that have captured the capitalist money gold and have influenced the world in a million ways, so I'm sure we'll get into, you come to see gold in a whole new light. It's like, wow, it really is a big deal. It is still prime money in the world today. We may think that paper in our pocket is, but it's not. Tokenized government debt versus free market money gold. And Bitcoin is disruptive to gold. It's superior across all those monetary properties. And it also introduces several other ones, but one that I think is really important is securability, and the fact that it's not easily confiscated or seized, which the state and central banks have basically built their business model on across history.
Yeah, which definitely goes back to the concept of path dependency, right? And another Nick Carter article talked about like how countries that have strong property rights do better because capitalists and businesses and entrepreneurs feel more secure in companies that honor strong property rights. And where we've seen, and you've talked about this in some other podcasts, where like the church has been replaced by the state, and then the idea is that the state is then being replaced by Bitcoin. In a similar vein, like we've seen a trend towards strong property rights throughout history because of perhaps its path dependency, because that's what fosters economy. That's what fosters businesses. That's what fosters commerce. That's and mainly economy and commerce and business and entrepreneurship. These are all scaffolding for people, right? Like this is scaffolding for people to achieve what their own goals are. And the way that an economy is neutral about this, in the way that like a religion isn't, or a country can sometimes not be, they are not neutral. They have subjective values. Like they promote one group of people or over the other, and therefore the economy inside of that nation state is filtered. It's tilted. It's got a bias, right? And that bias impacts the economy and says like, well, some people are going to be able to use the scaffolding better than others. And then and that's because the nation state has captured the economy. It's captured the money and it controls everything. And it honors property rights until the point where it doesn't want to honor them anymore. Except Bitcoin doesn't do that. Bitcoin doesn't care about your background, your race, your religion, your gender, whatever. It just gives you property rights, which offers new scaffolding for people to build their world around. And that kind of gives its path dependency into success. Like people love property rights because that's what creates economy, and economy is good. So I'm fully on board.
Yeah, I think it's important to be clear about the rules and definitions here. So one that I like to lay out for people very simply is capitalism has a bad rap today, but we don't have free market capitalist world, right? Money is one half of every transaction. Money is not freely determined on the market. Central banking is a socialistic structure. It's literally the fifth dictate in Marxist playbook. Like it's not even arguable. That's what it is. Capitalism simply means that you have the exclusive rights to the fruits of your labor. So whatever you go and work out and do, and whatever value you create, you have rights to that. That's all it means. Socialism, on the other hand, means that the state has rights to that. They get to decide how you spend your time and effort. That's all that means. So I think it's like intuitively very obvious which of those models is better morally.
Which one
and
has
then
the
it
path
also,
dependency?
yeah, and then it also turns out practically, right? And to define property, like a lot of people think, oh, this table, that chair, this house, that's not property. Those are assets. Property is the publicly recognized relationship between you and that asset, that you have exclusive and exhaustive rights to control that asset, trade that asset. Whatever you've done to create value and earn it or build it, you then have the ability to trade that with others that have done the same thing. And it is through those acts of free exchange that people figure out the best ways to solve problems. Again, we're back to ideas colliding in the marketplace. I have a perpetual economic incentive to prove someone wrong in the marketplace with a better idea. And it is that sequence and series of betting that keeps pushing civilization forward. That's how we innovate. It never comes from a government structure. Like it must be done by people tinkering, right? And Nassim goes into depth about this, how we have this delusion that a lot of innovation comes from academia, when in fact it comes from tinkering, people in garages, penicillin's invented in the sink, et cetera, et cetera. So when you look at property rights and how they fit into an economic system, they basically just end up being the rules of the game, right? We're all playing this game, trying to prove each other wrong in the marketplace, but respecting our rights to our own time and labor and the product thereof. And when you start to violate or twist those rules of the game collapses, right? And this is the true with any game. Pick a game and then tell me the rules are pliable. How fun is that game?
Yeah.
And then who gets to decide the rules of that game?
Or ask me to commit, hours of my time to playing it.
Or your life to playing it, right? That's what macroeconomics is this infinite game of constantly trying to prove each other wrong in the marketplace. And by doing so, you create innovations that benefit everyone forever. It's just like, it's really mind blowing. But when you twist the rules, as socialistic structures do, and violate property rights, which monetary inflation is, when you increase the supply of money and give it to a select few, if it's not done homogenously, which it never is, it's always printed and given to, kind of lent out into tiers of banks. that is equivalent to amending the list of property rights of who owns what in an economy. Because all you've done is shift productive claims from the people that had them originally to the people that receive new money first. As we all know in Bitcoin, Cantillon effect.
Right.
But it's more than even a wealth distribution. It's wealth destruction, because when people lose trust in the rules of the game, they become defensive, they trade less, they innovate less. The incentives become such that you want to align yourself, you want to get close to the governance of those rules because you're able to suck value out of everyone. So it really perverts the character of people too. And I would argue that's what you see in government today. And that's what you're seeing worldwide with this populist backlash, is people are sick of it. Even if they don't cognitively understand it or can articulate it, they know it, they feel it, they see it. Like something is corrupt here, something is wrong. Their time is being stolen. Their energy, their essence, their vital lifeblood is being sucked out of them by this invisible institution. And yeah, I think it's just, I argue, one of the quotes of the piece is that only unstoppable ideas can break otherwise immovable institutions. And it was the comparison I make was the Catholic Church. They premised their proselytizing efforts to people on that finite model of the universe. They're telling people, converting people to Christianity, and here's how the universe works. And they said, here's the Aristotle model of the universe. It's finite. There's atoms, and there's stars on the outside, Earth's in the center. Well, zero comes along as an unstoppable idea, and it blows out that philosophical model. And with it went the power of the church. That was the power base of the Catholic Church. So all of a sudden, the emperor has no clothes on, so to speak. And, further, zero led to all this technological innovation that led to the printing press and all this. So I really think that Bitcoin, representing the discovery of the absolute scarcity for money, it goes against the entrenched wishes of power structures like the Fed, that they're premised on the opposite model of the universe, so to speak, right? Infinite cash. The guy said it, the Fed guy said that recently in his piece. The Federal Reserve has infinite cash. Okay, anyone that's listening to this, please go divide by infinity and see what number you get. The answer is zero. So he's saying the US dollar in the long run has zero value. So be careful.
That's a really concise way to put it. There's nothing more oxymoronic than putting infinite and cash right next to each other.
It's unbelievable. Yeah.
So
Scarcity
Robert,
is
I
the
think
show
this,
important money.
yeah, I think this is actually a really good transition point. I want to bring it back to like guaranteed scarcity. Like how does that change the game? Can you talk specifically, like, what does introducing absolute scarcity do to the world in your mind?
Yeah, I think a simple way to put it for people that maybe are new to this is that, again, monetary inflation, when you're increasing the supply of money, like a select few group of people are able to increase the supply of money, they're able to extract wealth from everyone that is not able to increase the supply of money. That is taxation, right? Or you could possibly say it's even extortion. You're really forcing people to use this money that they have a back door into and they can suck value out of, right? The entire arc of human history has seen people like fight for this and do anything they can to gain this ability, right? It used to be princes clipping their coins. When coins are actually made of free market money, like monetary metal, they would clip the coin, keep all the residual content for themselves, keep it in their war chest, reissue the coin to the public at the same face value. So they take a little vig on the coin issuance. And, today we've gotten so off the rails that it's literally just a tokenized piece of paper representing government debt. There's nothing underlying it. It's just the belief in the taxing authority of the government, essentially, in perpetuity. That's what you're doing when you're holding or transacting dollars. And that is just, it's like a parasite on the economy. That's all monetary inflation is. It's whatever institution can gain control over the printer, can extract value from all the productive people that are tinkering, trading, figuring things out, learning in real time by the stressors they encounter as an entrepreneur, because it's a painful process, right? What's the success rate of business? 95% failure rate, something like that. Like people, you only learn by failure. So people are going into the world with their capital, with their skin in the game, their time, their effort, their energy, their hopes, their dreams, and they're making bets on their ideas, trying to compare them to other people's and see who wins, right? And it's a painful process. But through that painful process is from which all innovations emerge. And so then you have this, on the flip side of that would be central banking, where there is zero innovation occurring. There's zero skin in the game. They get to keep whatever value they suck off of people. And then if they make a bad bet with as we saw in 2008, right, with the housing crisis, banks made a bad bet. What happened? They just revved up, money printer went burr, and they sucked value back off of people. So they're privatizing all the gains, socializing all the losses. It's an economic mega wealth parasite. And that's what central banking is. It's the biggest apparatus of criminality the world has ever had. And I think Bitcoin is just the stone, slung into the eye of Goliath, as I say. It just breaks that model, that business model. You can no longer steal value from people via monetary inflation just by holding Bitcoin. And I think, that's why it's such a big deal. And that's why people get so fired up about it, is that there really is finally a technology, a software that's really automating away the functions of and eating the central bank. The central bank that's driven wealth disparity, funded perpetual warfare, done all this bad activity in the shadows for over a century now.
I'm assuming you've read the Sovereign Individual.
I have. I recommend it highly.
Right.
Yeah.
Well, in that case, then, so the idea is that like the government and the government's ability to coerce and control people in ways that we initially agree with, and then later perhaps disagree with, but at that point it's too late. I think the riots and the protests that are going on that we talked about are a great symbol of that, where I totally agree. And we're seeing that across the world, right? So there are riots everywhere. And I mean, I guess there is systemic racism across the whole entire world, but like, do we really think that is what everyone is getting upset by? No, it's the fact that the institution of the state has developed and matured to the point where that it has stopped being a good service for people and started being a coercive and extractive service. And
as all monopolies become, right?
As all monopolies become, right? That is the nature of these systems. And like things like organizational schemes that came before it, like the state is an organism, right? Like it was born, it matured, it developed, and then now it's becoming senile. Now it's becoming inefficient and slow. And the money printer that we talk about is like, I got $1,200 because of coronavirus, but like the rest of the trillions of dollars that were printed just went straight into the stock market, which reflects almost nothing for the majority of actual people of the world. And now there are protests everywhere across the globe, and I do not think that is a coincidence.
I agree completely. And so one thing on the money printing piece specifically, in the US, we're the central bank of the world. So it's actually, not only are we're externalizing this inflation, not only on our own people, but we're also doing it on the world, right? Most international debts are denominated in dollars. Oil contracts are forcibly denominated in dollars.
It's the legacy of our colonialism.
That's right. So when we won World War II, we structured it this way. It's by design, right? Dollars to be pegged to gold, every other currency pegged to us, so that we could externalize inflation. Meaning we can send them paper that we can print ad infinitum, and they send us stuff. And that's worked great for, since the 1940s. We've just done that. We've benefited from that exorbitant privilege.
I wonder why the U.S. is the land of the free and the land of opportunity. I feel like the Cantillon effect definitely has a big part in that.
That's absolutely right. But I think it's so severed our skin in the game that you see us if you travel internationally, I think there's a distinct sense of not being so proud to be American sometimes. Like there are portions of our culture that are just out of touch with reality. I think like American exceptionalism is asinine, right? To think that we're better than other people just because we were born on this continent. I mean, I think that's the height of egoism. And on the printing piece, I think the number we're at today is like $6 trillion, looks like total so far. And we're just getting started, by the way. Because it's a leverage-based system, it requires more and more leverage to be sustainable. That came out to about $46,000 per U.S. household. And, like you said, you received a $1,200 check, right? So call it $2,400 per household you received. Where do you think the rest of that money went? Like they send you just enough money to keep you calm, to try and buy your passivity, right? And they didn't even do this in 2008. 2008, they just recapitalized the banks. People weren't angry enough. But this time, the shock is different, and they're trying more exotic tactics. And now we're using helicopter money to try and keep people calm, keep people at home, keep people docile. And I don't know, I'm amazed how quickly things have changed since February, right? It's like we had 2020 so far is like a 1918 influenza, a 1929 style economics collapse, and a 1960s style social revolt all rolled into one. And I really think like that sovereign individual thesis is starting to play out. And we are in the end game of fiat currency. And stock market at all-time highs today with 40 million people unemployed. Like we're at peak market stupidity. Like price discovery has failed. Price discovery it's just turned into a casino now. You just put money, like people just buying stocks. It is a casino. Just buy stocks to shield yourself from inflation because everything is going up and no one understands why. There's no real economic production underlying it. And it's just, it's peak monetary socialism, I think. And so for the same reasons, Soviet Russia collapsed. They tried to control the entire economy, but that enforcement is very costly, right? By the end of the Soviet Union, I think 30% of their workforce were paid informants. So people telling on each other for breaking the rules. It was illegal to be sad in the Soviet Union because to be sad or depressed meant that the state's plan was not going right because it was a utopia, right? That thing collapsed because it created all these control and enforcement costs that made it unsustainable. So I think for the same mathematical reasons we saw absolute socialism collapse in Soviet Russia, we're going to see monetary socialism collapse everywhere in the world. And we go back to monetary capitalism, which it's either gold or Bitcoin. And I argue Bitcoin's superior.
Christian, I'm just gonna do a hard pivot then. Sorry, we're coordinating. Okay. So I want to ask get a little bit of your take on Ethereum related subjects. Are you familiar with EIP 1559?
I'm not.
Okay. So this changes up the fee markets. And so when you make a transaction on Ethereum, and this solves gas estimation, and in Bitcoin, this would be like price estimation, right? So like how do we figure out a way to make sure that the amount of a transaction fee that you pay is actually what you need to pay in order to get your transaction included? Like that's kind of an unsolved problem across all of spheres. And so EIP 1559 is this attempt to fix that, where instead of paying your transaction fee to the miner, you burn it, basically. And this kind of creates a difficulty adjustment type of mechanism based on congestion of the network. And so if the network is congested, the number that you need to pay goes up. And then if it's less congested, the number goes down. And then you can also tip, which then goes to the validators, the miners. But it's really just a small portion of the overall fee. The main point is that the fees that get burned or that get spent get burned rather than going to the miners. And the reason why Ethereum does this is because there's issuance, right? Like there's perpetual issuance because Ethereum promotes the security of the blockchain sooner than it does the scarcity of the asset, right? Like Bitcoin holds 21 million first in its primacy, and then the security follows that. the Ethereum it goes security first, and then the minimum viable issuance of Ether, the asset, afterwards. The point is that the whole idea is that when you have a strong, healthy economy, we're burning a lot of ETH. Like, we're making it deflate. We're turning it into a deflationary asset. At the same time, we have new issuance to counteract that. But the narrative that some people, like myself included, have been spinning is like, well, when this economy is really rolling and that flywheel is really turning, we'll have issuance on one side and burning on the other. And the burning is a really elegant solution because it benefits no particular person at all. It just it benefits everyone equally.
It's like universal inflation, right? Or
universal deflation.
It's as if the central bank printed money and gave it to everyone evenly.
Yes. And then when it charged taxes, it didn't go back to the government. It just disappeared. Yeah. Right. And so, like, there are some costs and benefits to this, right? Like, the benefit is that, if the Ethereum economy is really healthy, well, then the number of Ether will actually go down. Like, the burning amount will be surpassing the issuance amount. The cost of this is that you don't know what the long-term supply of Ether is, right? And so your Ether's not at zero, right? It is not the void. It is something positive or negative or both, depending on what the time is. So I was wanting to get your takes on how you think about that mechanism.
Well, one of the things I don't think is talked enough about in Bitcoin, in terms of an economic principle, is that it's the closest thing we've ever had to perfect information. So it's, the old adage, there's three certainties in life, or two certainties in life, death and taxes. It's like, now we have death, taxes, 21 million Bitcoin. And again, back looking at those market actors that are all trying to figure stuff out, competing with each other, like, you can consider money, even gold, was like the most predictable thing, right? That's why it became money, essentially, because no matter how much time was allocated towards its production, its supply increased the least. So you could basically trust, you didn't need to trust anyone, you could just trust natural law that the supply of gold would be the most reliably fixed and stable across time. And looking at Bitcoin, it's perfectly transparent, perfectly knowable. It's perfect information, right? Like, when you're playing chess, that's a game of perfect information. You can see all the pieces, all the moves, everything about the game. There's nothing exogenous to the game that can throw off your strategy. You have perfect information. Whereas, with central banking, it's like the complete opposite. You have no idea what's going to happen, like what government's going to default, how much they're going to print, how much they've already printed, who gets to decide, who even benefits. We don't know who profits from the production. The shareholders of the Fed are undisclosed, so we don't know that. So I think, and to generate more wealth, you need to get closer to the economic principle of perfect competition. And perfect information is a prerequisite for perfect competition. So I think as money, again, Bitcoin has just sort of maxed it out. You need that absolute scarcity, that perfect predictability. As far as Ethereum goes, I mean, that sounds like an interesting concept, but it's certainly less knowable than Bitcoin. And so I don't think it would not outcompete Bitcoin as money on that fact alone. Like, even if you gave it equal market cap, equal miner share, mind share, all the network effects, if it has an unknowable terminal supply, it's less reliable as money, right? People are going to gravitate towards the rules that are known, and that's Bitcoin's optimized that.
Do you want to say something, Christian?
I mean, no, I guess not 100% sure.
I'll take it.
Go for it. Yeah.
So I often think Bitcoiners make arguments that are closer to Bitcoin should, not Bitcoin will. Like, Bitcoin should be the money of the world because of these qualities that it has, these characteristics that it has of, fairness, predictability, stability, etc. And so that should make it good money, not that it necessarily will make it good money. Now, I totally agree with you that, like, the in unpredictability of Ether's supply, and therefore Ether's scarcity, does thwart it at being something akin to gold, right? A new gold. Like that's not really in the Ethereum narrative. It's not really in the Ethereum social contract. However, I do believe that EIP 1559 and the upside potential that it gives towards people that adopt the Ethereum ecosystem, because what the burning does is, or what EIP 1559 does is, it gives upside exposure to all the ether holders on the growth of the network directly, right, rather than indirectly, right? So it's like if Bitcoin actually grew larger, it actually would become more scarce. Like, well, then you lose the dependency, but you also get active. It's actively deflationary rather than passively deflationary. So it is actually this incentive mechanism to actually buy in early and then help promote the security of Ethereum. And so, like, whereas I totally am aligned with all the things you said, where like this Bitcoin would make good money, I think the actively deflationary nature of Ethereum actually is a concrete fundamental part of its value proposition that will actually bootstrap it into reality.
I honestly, I got actually started. I'd heard of Bitcoin in 14, wrote it off, just all the typical fallacies. And it was in studying Ethereum in 2016, and I landed on the concept of smart contracts. When I read Szabo's piece on smart contracts, that was my light bulb moment. I was like, holy shit, this is gonna be huge. So I have like a kind of a sentimental place for Ethereum, but having invested in this space and studied it for a longer period of time, the problem with Ethereum is in theory, right? Everything that we talk about with Ethereum is in theory. And all Bitcoin needs to do, it's competing for the market for money. And all it needs to do is continue doing what it has done flawlessly for the past 11 years, right? No complex computer science problems need to be solved. Maybe you could argue some new features need to be added, but all of these are largely off the core protocol. It just needs to keep turning out a block every 10 minutes. Whereas Ethereum has this super convoluted, complex, adaptive thing. And maybe it could actually compete and will be successful. But I would argue that the addressable market for Bitcoin, global money, call it 80 to 100 trillion dollars. I think you could look at the entire alternative crypto asset space and say maybe it has a total addressable market of $20 trillion. So even if Ethereum succeeded like beyond your wildest dreams, I don't think its market cap can get much higher than that, even if it outcompeted all other alternative crypto assets, which maybe I haven't done the math, but maybe on a magnitude basis, that means there's more upside potential in Ethereum if that, much more unlikely case were to play out. But I just think Bitcoin is, especially for sure in the space, it's the safest bet, but I think it's one of the safest bets in the world. It's clearly, this is not investment advice. Black swans by definition are unknowable, right? They're unknown unknowns. So everything that we're talking about today is black swan vulnerable. Everything's always black swan vulnerable. But there's just not a lot of chinks in Bitcoin's armor, so to speak, whereas Ethereum, I think, is just much more theoretical.
I kind of want to, push back a little bit, and not because I disagree with you, but I think a lot of our audience may disagree with you. They would say that there are chinks in Bitcoin's armor, and one of the reasons why you need to jump through these hoops in Ethereum to have stakers, to have inflation, to have burning, is because mining and the block reward reducing to zero is not sustainable. Do you have any responses to those concerns?
Yeah, there's a great piece that Dan Held wrote about this called Bitcoin Security is Fine. And he goes in pretty good detail about why he thinks the fee market's going to be more than necessary to offset the Coinbase subsidy. And I tend to agree. Bitcoin, it's very much a binary bet, right? It's either going to work as we think it's going to work and be a major, quote unquote reserve asset. I don't know if that will even have the same definition after it succeeds, or it's not. So I don't think there's going to be a lot of this middle ground. And I do appreciate that Ethereum and alternative crypto assets are pushing the envelope, trying new things. And I consider that as, clearly Bitcoin inspired all of this. I view that as another benefit of open source technology, and that it creates its own market proving grounds. If Ethereum does go out and discover some new advanced feature that makes sense and is simple enough to be incorporated into the core Bitcoin protocol, then I think that would happen, right? So I feel very strongly that it is prudent for your crypto asset portfolio to be no more aggressive than 80-20 Bitcoin, everything else. And with everything else, I include Ethereum. And I think the most conservative you would be is 100-0 Bitcoin, everything else. That's just my position. It's my perspective. Again, I've stopped. I didn't even hear about the EP 199 you just mentioned. I don't do as much homework on Ethereum as I used to, but from an economic principled perspective, that's how I see it.
Shall I wrap up? You're muted.
You don't have a response to that. I have one more question. So I guess in your mind, like what does finance look like in the Bitcoin world? Because I've actually like pushed this criticism on DeFi a lot, that it's a little skeuomorphic to how finance works today. And I kind of agree with you on a fundamental level that Bitcoin is this thing kind of like zero, where it completely redefined how we even look at the world of ownership and property and measuring value. And that finance today is not even a good example of how people are going to trade derivatives and trade value into the future. Do you have any thoughts around like Bitcoin as this kind of I guess portal into the new world of finance and what that looks like?
Yeah, that's a really good question, and I can speculate a little bit. Clearly, nobody knows, but I think the first thing that's obvious is we're 325, 350% debt to GDP today. Like that number is not natural. That's a fiat finance aberration, and that I think under a true capitalist system would flip back to something more like 10 or 20% of world GDP. So you would just see a collapse in debt markets where, because Bitcoin provides instantaneous global final settlement, you're just going to see a lot more settlement and a lot less promises, right? The whole thing, what banking again is it was built on top of gold, because gold is difficult, expensive, hard to safeguard and transport. So you can't settle with finality quickly and easily, which is it's an inhibiting force on economic activity, right? But Bitcoin blows that out of the water. All of a sudden you can beam gold around the planet at the speed of light, right? So I think with instantaneous final settlement, it's just going to make markets be, of the economy, debt will be a much smaller component. It will be a much more equity-based economy, which actually will generate a lot more wealth and subject it to fewer and less severe booms and busts. So we're gonna, just like the Austrians theorize, we'll see a stabilization of the business cycle. As far as what the institutions look like, I mean, it's really hard to say. I think it's less intermediated because you just don't need as many accountants, lawyers, bankers. You don't need these bureaucratic layers to establish trust, because you can just settle with finality on the blockchain, or you can map it out into a smart contract, right? Into things that are much more trustless. So we'll be shifting our trust function from social institutions to distributed software, I think, in a nutshell. And yeah, I'll leave it at that. I think it's a much more healthy and historically accurate market, and that it's just more equity based, and we'll get past all this debt mania that central banking has imposed upon us.
No, I don't really want to push that back. Sorry.
All right. Well, in that case, let's wrap it up. Robert, thanks for coming on. I think this is interesting, and the way that you describe things is very simplistic, and it really kind of cuts to the core of the idea. I really loved how you described the difference between capitalism and socialism, and you that's just one example of how you've broken down a lot of these different concepts throughout this interview and all of your other works that you've done. So thanks for distilling this in such an elegant and understandable way. I really appreciate that.
Thank you, man. I really appreciate the compliment.
Robert,
I think you do a great job with bringing in a little bit of mythology and a little bit of poeticness into this new technology, which is definitely helps people resonate, I think, on emotional level better than they otherwise would have from somebody with a more technical mindset. So people like you are super valuable in this space. So thanks for putting out the content of what you do.
Oh, thank you, man. I really appreciate it. I will say at this point in the rabbit hole, I do believe that the monetary standard and the moral standard are the same thing. So we do have a moral imperative to bring honest money back into the world.
Yeah, Robert, for those who want to totally agree. And for those who want to read more about your works, learn more about Parallax Digital, where can they find you?
Sure. I'm on Twitter. My last name is Breedlove. That's BREEDLOVE. So my Twitter handle is Breedlove22. And then I post most of my writings on Medium. And more recently, I put them on Dig as well, digg.com. And then our website is parallaxdigital.io, PARALLAX digital.io.
Awesome. Thanks, Robert.
Thanks, guys.
Peace.
All right. Fantastic. We'll start